What's going on, everybody? This is Demetrius Harris, your DAC Funding Broker, and on this channel, I help business owners get access to funding in all types of industries. If you own a coffee shop, cafe, espresso bar, drive-through coffee business, mobile coffee truck, coffee roastery, specialty beverage shop, or another food and beverage business, this video is for you. Today I'm answering some of the most common questions coffee shop owners ask about business funding. How much coffee shop funding can you receive? What determines your funding limit? What repayment terms may be available? Are payments made daily, weekly, or monthly? How quickly can a coffee shop get approved and funded? What documents may be required? Can you qualify without perfect credit? Can funding help with payroll, inventory, equipment, renovations, marketing, or expansion? Before we get started, make sure you like, subscribe, and hit the notification bell for more funding content. Let's get into it. Here is the truth. A coffee shop can be busy every morning and still experience serious cash flow pressure. You may have customers lined up for coffee, breakfast, pastries, and specialty drinks, but you still have to cover payroll, rent, utilities, coffee beans, milk, syrups, cups, food inventory, equipment maintenance, merchant processing fees, and other operating expenses. Revenue may come in every day, but expenses can also hit every day. In this video, I'm going to explain coffee shop funding limits, repayment terms, qualification factors, required documentation, and potential timelines so you can approach the process with realistic expectations. Funding amounts, rates, costs, repayment terms, qualification requirements, and timelines vary by lender, funding product, and applicant. Approval and funding are not guaranteed. Question 1. What is coffee shop business funding? Coffee shop business funding is capital that an eligible coffee shop owner may use for legitimate business expenses. Depending on the lender and funding product, the money may help cover payroll, coffee beans, milk and dairy products, syrups and flavorings, food inventory, cups, lids, sleeves, and packaging, rent, utilities, equipment, repairs, furniture, marketing, delivery expenses, store renovations, working capital, expansion, opening another location. Coffee shop funding is not one single product. Possible funding products may include working capital, equipment financing, business lines of credit, term loans, commercial real estate financing, invoice-based financing for wholesale roasters, and other business funding options. The right option depends on what the coffee shop needs, how much capital is required, how quickly it is needed, and whether their business can support the repayment obligation. Question 2. Why do coffee shops need funding? Running a coffee shop requires more than making great coffee and creating a comfortable environment. Coffee shop owners may have to manage employee wages, rent, electricity, water, gas, coffee bean inventory, milk and alternative milk, flavorings, cups and packaging, food inventory, insurance, licenses and permits, point of sale equipment, point of sale systems, equipment, maintenance, delivery costs, marketing, cleaning supplies, merchant processing fees. A coffee shop may also experience seasonal changes in customer traffic. Cold drinks may sell more during warmer months. Hot beverages may increase during colder months. Holiday traffic, school schedules, local events, office attendance, and tourism may all affect revenue. Funding may help the business manage temporary cash flow gaps, prepare for busy seasons, replace equipment, or invest in growth. Question 3. How much coffee shop funding can a business receive? There is no universal funding limit that applies to every coffee shop. The possible amount may depend on average monthly revenue, consistency of business deposits, time in business, cash flow, bank account activity, existing debt, personal or business credit, requested use of funds, the funding product, the lender's guidelines. A small mobile coffee cart may not qualify for the same amount as an established cafe with multiple locations and strong monthly sales. The approved amount generally needs to make sense compared with the business revenue and ability to repay. Requesting a particular amount does not guarantee that amount will be approved. A lender may approve a smaller amount based on the strength of the business application. Question 4. What determines the funding limit? Several factors may influence a coffee shop's potential funding limit. Monthly revenue. Lenders may review how much revenue the coffee shop generates each month. Stronger and more consistent revenue may support a larger funding request. Business deposits. Lenders may examine the amount and frequency of deposits entering the business bank account. Consistent deposits can help demonstrate that the coffee shop is active and generating sales. Time in business. An established coffee shop may have access to more options than a newly opened cafe with limited operating history. More time in business provides lenders with additional financial information. Cash flow. A coffee shop may generate strong sales, but still have limited cash remaining after payroll, rent, utilities, inventory, and debt payments. Lenders may want to see that the business has enough cash flow to manage another payment. Existing debt, current loans, equipment payments, credit card balances, advances, and other obligations may affect how much additional capital the business can support. Credit profile. Depending on the funding options, lenders may review the owner's personal credit, business credit, or both. Credit may influence the funding amount, cost, repayment term, and available products. Question 5. Do coffee shop owners need perfect credit? No. Every coffee shop funding option does not require perfect credit. However, credit may still influence approval, probability, available funding products, funding amount, interest rate or total cost, repayment period, payment amount, collateral requirements, personal guarantee requirements. A coffee shop owner with imperfect credit may still have options when their business has steady revenue, consistent deposits, healthy cash flow, and sufficient time in business. The important point is that lenders generally consider the complete financial picture. Do not assume credit is the only factor. At the same time, do not assume credit does not matter. Question 6. What are the repayment terms? Repayment terms vary depending on the funding product and lender. Short-term working capital products may have shorter repayment periods and more frequent payments. Traditional term loans may provide longer repayment periods and scheduled monthly payments. Equipment financing terms may be connected to the equipment's cost, age, condition, and expected useful life. A business line of credit may allow a coffee shop to draw funds when needed and repay the amount used, subject to the lender's requirements. Before accepting an offer, coffee shop owners should understand approved funding amount, total repayment amount, interest rate or factor rate, payment amount, payment frequency, repayment period, origination or administrative fees, prepayment provisions, collateral requirements, personal guarantee requirements, default provisions. Do not evaluate an offer based only on the amount of money available. The payment structure must also fit the coffee shop's cash flow. Question 7. Are payments daily, weekly, or monthly? Payment frequency depends on the product. A coffee shop funding offer may include daily payments, weekly payments, bi-weekly payments, monthly payments. Certain working capital products may use daily or weekly payments. Traditional loans and some equipment financing products may offer monthly payments. Coffee shop owners need to compare their payment schedule with how their business earns revenue. Because coffee shops may generate daily card sales, some owners may assume a daily payment will automatically be manageable. However, the owner should still calculate how much cash remains after payment, after payroll, rent, inventory, utilities, and other expenses. A payment should be manageable during average and slower sale periods, not only during the coffee shop's strongest weeks. Question 8. How fast can a coffee shop get approved? Approval timelines vary by funding product, lender, requested amount, and application strength. Some working capital applications may receive an initial response quickly when their business meets the requirements and provides complete documentation. Larger requests, traditional loans, equipment financing, commercial real estate transactions, or a more complex application may require additional underwriting. Factors that may affect the timeline include missing bank statements, incomplete applications, unverified ownership, inconsistent business information, credit issues, tax problems, existing debt, negative banking activity, equipment documentation, large funding requests, additional underwriting questions. A quick initial decision is not always the same as final approval of funding. The full process may include application submission, document review, credit and business review, underwriting, offer presentation, agreement signing, final verification, disbursement of funds. Question 9. How can a coffee shop speed up the process? Preparation may help reduce unnecessary delays. Before applying, gather the information and documents that may be requested. These may include government issue identification, recent business bank statements, voided business check, business formation documents, employer identification number, proof of business ownership, business license, food service permit, tax returns, profit and loss statement, balance sheet, existing debt information, equipment invoice or quote, commercial lease, proof of business address. Not every lender will request every document. However, accurate and organized records may make the process smoother. Make sure the coffee shop's legal name, address, ownership information, contact information, and bank details match across the application and supporting documents. Inconsistent information can create verification delays. Question 10. What documents are usually required? The documents required depend on the funding product. For revenue-based working capital, the lender may focus on business bank statements, monthly revenue, deposits, cash flow, time in business, ownership, verification. A traditional loan may require personal and business tax returns, profit and loss statements, balance sheets, debt schedules, business plans, financial projections. Equipment financing may require vendor information, equipment invoice, equipment description, model and serial information, purchase agreement, details about the equipment's age and condition. Larger and more complex requests may require more documentation. Question 11. Can a new coffee shop qualify for funding? New coffee shops may have fewer options because they have limited operating history, revenue records, and established cash flow. However, possible options may depend on how long the coffee shop has operated, current sales and deposits, the owner's credit, food service or business experience, available collateral, equipment being purchased, the owner's investment in the business. The funding product. A startup coffee shop should not expect the same options as an established cafe with several years of stable revenue. New owners may need to begin with smaller amounts, establish business banking, build consistent sales, improve credit, and maintain organized records before qualifying for larger funding. Question 12. Can funding be used for inventory and supplies? Depending on the funding product, coffee shop funding may help purchase coffee beans, espresso, tea, milk, cream, alternative milk, syrups, sweeteners, flavorings, baked goods, breakfast foods, sandwich ingredients, cups, lids, sleeves, napkins, straws, containers, cleaning supplies. Inventory and supply costs may increase during busy seasons, promotions, special events, holidays, or expansion. Working capital may help the business purchase inventory without using all of its available operating cash. Owners should confirm permitted uses before accepting funding. Question 13. Can coffee shop funding cover payroll? Certain working capital products may be used for payroll. Payroll can be one of the largest recurring expenses for a coffee shop. A coffee business may employ baristas, cashiers, bakers, kitchen staff, shift supervisors, store managers, delivery drivers, cleaning employees, customer service staff. Funding may help bridge a temporary cash flow gap when a payroll is due before the business collects enough revenue. However, funding should not permanently replace proper scheduling, pricing, and cash flow management. If the coffee shop cannot regularly cover payroll from operations, the owner may need to review labor scheduling, operating hours, menu pricing, product margins, overtime, employee productivity, food waste, inventory control, customer traffic, delivery costs. Funding can assist with a temporary timing problem, but it cannot repair an unprofitable business model by itself. Question 14. Can funding be used for coffee shop equipment? Equipment financing or another eligible business funding product may help purchase commercial espresso machines, coffee grinders, coffee brewers, refrigerators, freezers, ice machines, blenders, ovens, panini presses, display cases, point of sale systems, water filtration systems, furniture, drive-through equipment, delivery vehicles. Equipment financing may be useful when the business needs a specific asset but wants to preserve operating cash. The equipment may sometimes serve as collateral. Approval may depend on the equipment's price, age, condition, useful life, vendor, and resale value. Question 15. Should a coffee shop use working capital or equipment financing? The best option depends on the intended use of the money. Working capital may be more appropriate for flexible expenses, such as payroll, inventory, rent, utilities, marketing, repairs, seasonal expenses, packaging, general operations. Equipment financing may make more sense when the coffee shop needs a specific espresso machine, refrigerator, oven, vehicle, or other major asset. Using equipment financing for the asset may help preserve working capital for daily expenses. The key is to match the funding product to the real business need. Question 16. What is a business line of credit? A business line of credit may give a coffee shop access to a revolving amount of capital. The business may draw funds when needed, repay the balance, and potentially reuse the available credit subject to the lender's terms. A line of credit may help with emergency equipment repairs, seasonal inventory, temporary payroll gaps, marketing campaigns, unexpected expenses, large catering orders, short-term cash flow shortages. A line of credit may provide flexibility, but owners still should review credit limit, interest rate, draw fees, annual fees, repayment requirements, renewal terms, personal guarantee, collateral requirements. Question 17. Can coffee roasters use invoice financing? A coffee roaster or wholesale coffee supplier may sell products to restaurants, hotels, grocery stores, offices, cafes, schools, hospital, distributors, corporate customers. Those customers may pay invoices 30, 45, or 60 days after delivery. Invoice financing or accounts receivable financing may allow an eligible business to access part of an invoice value before the customer pays. Approval may depend on customer creditworthiness, invoice quality, delivery confirmation, customer acceptance, payment terms, disputes, or returns. Not every coffee business or invoice will qualify. Question 18. Can large catering or corporate orders help with approval? A large catering office, event, wholesale, or corporate order may demonstrate potential future revenue. However, an order does not guarantee funder approval. Lenders may still evaluate current revenue, business deposits, time in business, cash flow, credit, existing debt, customer payment terms, profit margins, the coffee shop's ability to complete the order. The order may support the reason for seeking capital, but the business must still satisfy the lender's requirements. Question 19. Can funding be used for renovations? Depending on the product, coffee shop funding may be used for kitchen improvements, customer seating, storefront upgrades, new counters, flooring, lighting, plumbing, electrical upgrades, drive-through improvements, outdoor seatings, signage, accessibility upgrades, restroom improvements, interior designs. Renovations may increase production capacity, improve customer experience, or make the business more efficient. Before beginning a renovation, the owner should understand the complete project costs, permit requirements, contractor schedule, and expected return. Question 20. Can funding help open another location? Expansion funding may help an established coffee shop open another location. Potential expenses may include security deposit, lease costs, build out, equipment, furniture, signage, initial inventory, payroll, training, marketing, licenses, insurance, working capital. Opening another location creates potential revenue, but it also adds significant overhead. The owner should confirm that the existing location is financially strong and that the new location can realistically support its operating expenses and funding payments. Question 21. Can funding support a drive-through or a mobile coffee business? Depending on the funding option, capital may help establish or expand drive-through coffee locations, coffee kiosks, coffee carts, mobile coffee trucks, event coffee services, office coffee delivery, catering operations. Potential costs may include vehicles, trailers, generators, refrigerations, espresso equipment, permits, insurance, inventory, branding, and point-of-sale systems. The best product depends on whether the money is needed for a specific asset or flexible operating expenses. Question 22. What can cause a coffee shop funding application to be denied? Possible reasons may include insufficient revenue, inconsistent deposits, too little time in business, weak cash flow, excessive overdraft, negative bank balances, high existing debt, poor credit, incomplete documents, unverifiable information, tax problems, too many recent applications, requested amount too high, restricted use of funds, failure to meet lender guidelines. A denial does not always mean the coffee shop can never qualify. It may mean that the owner needs to improve specific areas before applying again. Question 23. What should an owner do after a denial? Ask for the reason when possible. Then focus on correcting the issue. That may include increasing monthly revenue, building more time in business, reducing overdrafts, maintaining stronger balances, paying down existing debt, improving personal credit, correcting inaccurate credit information, organizing business records, separating personal and business financing, requesting a more realistic amount. Do not immediately submit applications everywhere. Multiple uncoordinated applications may create additional inquiries and make the business appear financially stressed. Question 24. How should a coffee shop compare funding offers? Do not automatically choose the offer with the largest approved amount. Compare funding amount, total repayment amount, interest rate or cost payments, frequency, payment amount, repayment period, fees, prepayment provisions, collateral requirements, personal guarantee, impact on cash flow, expected return from the funds. Ask whether the coffee shop can comfortably manage the payment during both busy and slow periods. The right option should support the business without consuming the cash needed for normal operations. Question 25. How should coffee shop funding be used responsibly? Funding should be connected to a clear business purpose. Before accepting capital, know exactly how much money is needed, what the money will purchase, how the funding will generate or protect revenue, how payments will be made, what happens if sales decline, whether the business has a backup plan, how much total repayment the business can support. Do not take more money simply because a larger amount is offered. The goal is to strengthen the coffee shop, not create a payment obligation that drains operating cash. Question 26. When is the best time to apply? The best time is usually before the coffee shop reaches a financial emergency. Do not wait until payroll is due tomorrow, the bank account is overdrawn, the espresso machine has already stopped working, the landlord is demanding payment, inventory is almost gone, utilities may be disconnected, a major opportunity is about to be lost. A coffee shop may present a stronger application when it has stable revenue, positive account activity, consistent deposits, and organized records. It is often better to explore funding while the business is operating steadily. Question 27. How can a coffee shop improve its approval odds? Coffee shop owners may strengthen their funding profiles by separating personal and business finances, depositing sales into the business bank account, reducing overdraft, maintaining accurate bookkeeping, filing taxes on time, monitoring personal and business credit, paying existing obligations as agreed, keeping licenses and insurance current, knowing monthly revenue and expenses, tracking product costs and margins, maintaining organized invoices and contracts, explaining the use of funds clearly, requesting a realistic amount, applying before the need becomes an emergency. These actions do not guarantee approval, but they may help the business present a stronger financial profile. Question 28. What is the most important thing to remember? Funding limits, repayment terms, rates, requirements, and timelines are different for every coffee shop. Two coffee shops in the same city may receive different results because their revenue, deposits, credit, cash flow, debt, and time of business are different. Do not compare your possible approval to another coffee shop without understanding the complete financial picture. The best funding option is not always the one offering the most money. The best option is one that fits the coffee shop needs, cash flow, and ability to repay. Now, here's a final recap. Let's review the major points. Coffee shop funding may help cover payroll, inventory, equipment, repairs, renovations, marketing, working capital, delivery expenses, and expansion. The possible funding limit may depend on monthly revenue, deposits, time in business, cash flow, existing debt, credit, and the selected funding product. Repayment terms may be short or long. They may include daily, weekly, bi-weekly, or monthly payments. Approval and funding timelines vary depending on the lender, requested amount, documentation, and strength of the application. Complete records, consistent deposits, clean business banking, and a clear use of funds may help prevent unnecessary delays. Most importantly, choose a funding option that fits the coffee shop actual needs and ability to repay. If you own a coffee shop and need funding for payroll, inventory, equipment, repairs, renovations, marketing, working capital, delivery services, or business growth, use the funding link in the description to explore available options. Remember that approvals, funding amounts, rates, terms, costs, and timelines depend on the lender and strength of the application. Make sure you like, subscribe, and hit the notification bell for more funding content. Subscribe to my YouTube channel at Demetrius Harris 1975. I'm Demetrius Harris, your DAC Funding Broker, and I help business owners access funding in all types of industries. Thank you for watching, and I'll see you in the next video.